Good evening, good morning, wherever you are. Yet another lesson in MMLs. I've been posting a lot of MML information in a new Slack room, which I created, and I will post the link as soon as I post the video. I'll go ahead and put it in the comments. A lot of questions I get asked are, say for example, we're in consolidation right here, okay? And you can tell that by looking at the MMLs. See how close those resistance, the resistance levels are, or the MML levels are? I mean, that's like one tick, okay? So, and you can see that it's pretty precisely defining between reversal and support -1. It's pretty precisely defining this range right in here. So we're in consolidation. I think I made another video about how to tell when you're in consolidation, how to tell when you're breaking out of consolidation. I don't believe that I mentioned how to tell which way you're going to break out of consolidation. Well, here's one way to look at it. Okay. Once we're in consolidation here, see these little gray bars here? Those are volume. This is how much volume is on these moves. Now, look at price going, say for example, going from here, and I'm just looking at that because that's an obvious support zone right here. Look at volume when we go up. When we start going up, you start seeing spikes in volume as we go up, spikes in volume. Then we come down, the volume drops off. There's another spike right there. Come down one bar, and then we go back up. There's another volume spike there, another volume spike there. Another volume spike there. And then as it comes down, you see volume starts coming down lower, like this. We did have a little bit of a speed up to the downside. It's kind of people sort of jumped on the short, probably all the algos, or some folks from the Asian session jumping on the short. But what happens when we get down to this support area down here? What happens? We start picking up volume to the upside. See that volume spike there? That volume spike there? Huge volume spikes on volume up. So if we look at that and we think about that in terms of volume price analysis, what does that tell us? And what that does is that tells us that there's not a whole lot of interest. You can see this right here. There's not a whole lot of interest in selling because the volume drops off. What's happening is the market makers are looking at that and saying, well, that's fine. Let's take a little bit of profit when it comes down here. But once it comes back down to what we would consider to be, say, for example, a support level down here somewhere, let's say 57.05. Then start seeing our volume spikes. There's a volume spike there, stopping volume right there to say turn the market around. You can see the candle here where the price rejection was down here. Lots and lots of volume there. Then lots and lots of volume here pushing price up. So when you see that, when you start seeing stuff like that, you can say there's a fairly good chance that we're going to break to the upside. Now, if it's reverse, of course, then we may break to the downside. But you can see, as you can see, price action is very tightly constrained by these MMLs, reversal and basically down to the support zone. Down here, that was obviously to me, that looks like a stop run. People having a bunch of stops. They start looking at the consolidation and start going, well, I'm going to go long here, and I'll put my stop down here. Put my stop down here to get it out of the way. Well, what happens? The market makers come in and go, bam, we're going to run your stops. Okay, cool. And so they run their people's stops, and then what happens? Unless you didn't jump on that move, you jumped on that move right there, and some people would, some people won't because they don't want to get stopped out. Well, right there, there was your at 57.08. There was your long at a very 57.08 at the next MML level down 57.07. You're looking at a 1 or 2 tick risk here. You might have gotten stopped out. Say, for example, if you put your stop down here, well, you got stopped out for what? 2 ticks? 20 bucks per contract. You got stopped out. You go back in again. What's your risk? What? 2 ticks, 3 ticks? Your reward is way up here, or even way up here. If you didn't want to, if you see this bouncing off reversal, you want to put your fill at overbought, which is 57.20. So you're looking at 57.08 to 57.20. I mean, that's that's what, 100 bucks. That's 100 bucks per move right there on one contract. There's a reversal. 100 bucks down, 100 bucks up. So there's $200 per contract. If you're trading multiple contracts, you're making more money. So this is how, number one, to see how this thing is likely to break out. I'm not saying it is. I'm just saying it's likely to. It's likely to break out to the upside. Just watch volume and see. And here's a good one where, see, price action's coming down from here and volume's falling off. So once we're getting here, now volume's starting to, you may see volume starting to pick back up. But anyway, I wanted to show you guys that. This is how to trade and not get chopped up in the chop. Just let your MMLs determine your support and resistance zones for you. Even if it goes up to reversal or goes down to oversold or even reversal down here, that's a great way to map out these consolidation zones, and it's a great way to pick up a little cash. Just work the levels back and forth and back and forth and back and forth. You know, you're making $100 up, $100 down, $100 up, $100 down. And when it breaks out, if you get stopped for, you know, you put your stop loss up here above that reversal, 57.21, you put it up at 57.22. So you get in where? 57.20 or 57.19, 57.18, wherever you want to get in down here. Write it down, and once it hits, once it hits down here, you take your profit and you turn it around. Now, there is a chance, I'm watching this right here, because what we did was we came down to, that's TPO POC, but that's also the major support resistance 4. That's pretty much in the middle of the zone here, and that's, if that's a 50% pullback to the upside, then eventually then it may break up to the upside. So if price action comes down here, and then I start getting, see, I'm starting to get more volume as the market's pushing up, then I would probably gotten out of my short there and waited for the setup. But you know, it'll give you, MMLs will give you some pretty high probability entries and exits, just playing those, support and resistance zones back and forth and back and forth. So you could get in, say for example, you could get into a short, say for example here, or you could get into a short here. We're starting to see volume might be falling off on that candle. So I would put in, say for example, I could put in a sell limit order there with a pretty tight stop. I'm only looking at, we're looking at what, 3 ticks? If it blows up against it, I was wrong. Then it's time for the breakout. So I would change strategies. And we could put our targets back down here, 10, 12, 13 ticks, something like that. So if you wanted to go for 11 ticks and take this guy, okay, I'm in for 11 ticks. That's $100 profit plus my commission, So let's see what happens. And you'll see all that. See, interestingly enough, see the volume just fell off on that doji. The volume again fell off on this guy here. So when you're seeing a low volume push up, it's pretty much guaranteed it's going to turn back around. When you see low volume on a down candle, it's pretty much not 100%, but it's pretty much guaranteed that you are going to get an upside move or get a downside move. Let's see, low volume on down candles, upside move, low volume on up candles, downside move. That's how it works. You can read a lot more about this. Oh, here we go. We're already up 7 ticks. You can read this, a lot more about this. And by the way, this is real time. You can read a lot more about this, and there's a volume price analysis book by a woman named Anna Cooling. She lives in the UK, I think. It's on Amazon. It's cheap. I mean, I think it's like $5 for the Kindle edition, and it, for anybody that wants to know about this stuff, it's well worth the money that you spend on that book. And what Anna Cooling teaches, she looks for price anomalies. She looks for like price action going up. Say for example, price action going up on low volume, price action coming down on low volume, price action not moving on high volume, that sort of thing. So, and she talks a lot about the patterns and 2 and 3 bar patterns that you can look for. She goes into a lot more depth. Anyway, I don't remember. I think it's called volume price analysis. and it's a really good book. I recommend it. I don't know Anna Cooling personally, but I've seen a couple of her YouTube videos, and they're really outstanding. Anyway, I'm going to get back to it, and we will talk to you later.